people are coming into this from an emotional engagement point of view, whether it's the New York Times, whether it's Facebook, whether it's Twitter, whatever we used to call it, etc. People are people. They're engaging emotionally with everything anyway without any technology when the lights go out, like in Houston. But when we have these megaphones and so on, everything is amplified. That's the only difference with social media over the last 20 years. AI is going to multiply that by another 5 to 10 times in terms of the amount of content that's going to be discussed, because AI agents are going to be generating content against each other, whether it's the New York Times content or anybody else's content. There's going to be battles of content along these lines.
Stocktoberfest is back this October 20th to 22nd with an intimate event for executives, influencers, and the most active investors in financial markets. Network with industry thought leaders, including Michael Batnick, Brian Shannon, Michael Parekh, and many more during the 2-day event. Early bird pricing is still available for a limited time, so be sure to find the link in the episode description, and we'll see you in beautiful Coronado, California. All right, you are live, Trends with Friends. We're multi-country, multifaceted. It is July 16th. I am in Provence for my first time. Michael's in Houston. He seems like he has power. JC's got 3 kids, so he'll be in this spot for the next 20 years. It's the easiest guy to find. And Phil ended his walkout and decided to come back from some foreign place.
Collective bargaining.
Never even told us he was leaving. We just had an empty spot on the Hollywood Squares for him. So,
like the podcast Irish exit,
Yeah, it was just like, Howard, take over. First of all, I hate being the moderator. I prefer talking. So, Phil, take it away. We got a lot to cover. Markets at all-time highs.
It's an embarrassment of riches.
By the way, Phil, you were in Costa Rica, which everyone should know was the birthplace of Jurassic Park. That's where they did the dinosaurs, just FYI. So
I thought it was in Kauai. Wasn't it in Kauai?
They actually filmed
I thought it was Ireland.
Kauai.
I thought it was Ireland.
The fictional story
that was Game of Thrones
in Costa Rica. Ila Nubira.
The
fictional story was set in Costa Rica.
Got it.
It was incredible and beautiful and wild, and we saw all kinds of different animals and hiked a volcano or something. It was fantastic, and I'm glad to be back though. Glad to sleep in my own bed.
I heard there's a monkey that looks like you in Costa Rica. Is that confirmed?
Dude, all my relatives, it appears. I looked at that one. I was like, oh, that's Uncle Dave. And I was like, oh, that looks like my brother Vic. It was like the whole family, the whole Perlman clan.
There's like a rare monkey that bred with like a European Jewish person who has one eyebrow. Is that
I think it's true.
Is that possible?
It's like the 13th tribe of the Jews. It's like the Costa Rican monkey tribe. That's where I came from. Okay, so here's the thing. It's embarrassment of riches that we have going on. Everything's working. There may be a few things that aren't, and JC maybe will point them out, but everything is working. And it's just like a total shitstorm for the Bears. So we have so much on our little doc to cover today. It's ridiculous. And so what we're going to do is, all we want is great ideas. We want tradable, great ideas, great thoughts. Michael's going to explain something to me that I don't understand, like I'm an idiot, that I am. And besides that, it's just really and that is also tradable over the longer term, but really just ideas. So let's just start it off with, it's going to be one after the next, and we won't get to everything, but let's just start with the Robinhood, Howie, because then JC threw the chart in there. What's going on with Robinhood?
Well, we've talked about on and off, and we've been pretty much bullish on it since 11, 12, but not so much pounding the table because, I have no inside info here. I don't talk to the board anymore. I don't talk to the founders. The company's not the same company that it was when I invested as a seed investor. There's been a lot of new people. But first of all, Phil, total shitstorm for the Bears is it's just a great title for this show. Not so much like pin your ears back, be bullish. It's just a shitstorm for the Bears that continues. So with Robinhood, this goes to your total shitstorm, right? Like sometimes companies get lucky, and we'll talk about Goldman, I'm sure. Goldman made countless mistakes chasing fintech for 10 years, trying to be Robinhood, trying to be everything to everybody. They didn't want to be themselves, which is, Mike can attest, was a pretty fucking good partnership for 50 years. Then went public and tried to be everything to everybody, right? Culminating in them, partnering with Apple, which is, checkmate. Apple doesn't lose to anybody. But with Robinhood, pulling that back up, the reason Robinhood's working so well is the PR crisis is behind them, right? Like Americans have short memories. We all knew that. If you compare it to the Chipotle's food poisoning chart, eventually people move on. And Robinhood, at its core, is still an incredible product that caters to the degenerate economy. And if we think back to 2022, when they were in their bear market and crash, and interest rates were rising, and trades were going down, commissions were going down, it hurt them. But what we also know is that FTX went out of business, and we also know when interest rates rose, that VCs, just walked away from founding competitors. So Robinhood comes into this new bull market, much like Goldman Sachs, with no competition, right? There's no real next Robinhood for American degenerates, other than maybe Coinbase and DraftKings. So they're a benefactor of this. They were buying back their stock, which I don't think was something I would have done at 10, 11 bucks. So they've got that consumer. The UI is still great. And so in a bull market, what does well? Brokerages do well. And
speaking of brokerages, Goldman Sachs, that was one of your 3Gs. Let's just hit that one real quick too, because they just reported. And you've been all over.
All-time high.
I mean, it's like shooting fish in the barrel, but still, we got to give credit where it's due.
Well, the only reason I thought Goldman was interesting when I brought it up in the high threes, low fours, was that Apple getting out of the Apple deal was a key final step for just giving up on being a modern fintech company. Michael can, work there and was a partner, so he can attest to being at a time when they never would have thought of doing all the things that they were doing, especially partnering with Apple, because Apple's the Goldman Sachs of everything else, right? You don't win if you go into business with Apple. And so by getting out of that deal, Goldman can focus on what it does best, right? Being a lean capital markets machine. And Robinhood, they have no competition. Sure, JP Morgan, Morgan Stanley a little bit, but everybody wants Goldman on their IPO. So if this market opens up, which it will, there's a lot of great companies that can still go public. Goldman's just going to print money. And with very few legitimate much trading competition around the world, Goldman benefits. And then also, as the world polarizes and countries, as we've been saying when we talked about Goldman the first time, as the world polarizes, you need Goldman. And Goldman can charge a lot of money for advice when you're talking about moving a lot of gold around or asset allocation. So, Mike, take it away from here as someone who worked inside Goldman. Does any of that ring true to you?
No, I think what they've been doing over the last couple of years makes a lot of sense in terms of the intermediate scenario. They're obviously right now, and they showed it in the quarter, they talked about it, that they want to move away from leveraging their balance sheet, to so less risk, but do much more customer-centric business. So they're reducing, they talked on the call about how their government stress test risk ratios were about a percentage too high. Again, that sounds kind of trivial, but this is huge on a balance sheet the size of Goldman Sachs, and they're moving directionally toward what they've always done very well for over 150 years, which is customer centricity. And so that was the big transition that they're making. Wall Street is excited about it. I think they're leaning into it. And so you're seeing it in the stock, as you're seeing on the chart there. The other thing in terms of the Apple deal, both for Apple and Goldman, what they were trying to do on the consumer side, and Goldman, independent of Apple, was also trying to build a consumer business. That was a 5 to 10-year roadmap. And for a whole host of reasons, both sides lost the appetite to not focus for that long. So Goldman said, hey, this is going to take a little bit longer than we think to get to the profitability on our side of the Apple deal. And so for a whole bunch of reasons, they unwound that transaction. And you're seeing the repercussions a little bit on the Apple side, and this is a little bit in the weeds, where they are moving away from the Klarna-like the business of allowing you to finance your purchases at in 3, 4, 5 installments. And so all of these are just tweaks to adjust the short term, but reorient the business for the long term for Goldman.
Excellent. So JC, let's just back up the lens for 1 second here. And small caps are working. They're going bazonkers, right? They're up IWM's up another $5 right here, whatever's going on. It's Tuesday afternoon when we're taping this. And you've pointed this out, and you've been all over it. But then there's also the big caps, the most important index in the universe, right? According to you. So they're both working. It's both sides of the barbell. Why don't you just take us through this?
Yeah, I mean, it comes back to sector rotation, right? And new leadership. And that's what you see in bull markets. Go back and study every single one. You're going to see sectors rotating. There are leaders, and then there's the laggards that catch up to the leaders. In bear markets, it's the opposite. You've got your laggards, and then the ones holding up the best ultimately catch down to the laggards. That's how bear markets are. In bull markets, the laggards catch up to the leaders. And who have the laggards been? Over the last 3-4 months, really since sentiment and breadth peaked in February, it was really just a sideways grind for a lot of cyclical stocks, home builders, industrials, materials, energy, a lot of the financials that are not in the capital markets, kind of just grinding sideways. And a lot of those spill into the small cap space as well. Small cap tech had been trading sideways for quite some time. And now you're getting that rotation into industrials. The Dow Jones Transportation Average, absolutely ripping. And let's remember that in the Dow Jones Industrial Average, of those big indexes, that's the one with the least amount of tech and the most amount of the other stuff. Healthcare, that hasn't done anything for years, right? United Healthcare is the largest component in the Dow Jones Industrial Average, for example. So you look at today, as we're recording, you've got the Dow Jones Industrial Average up 600 points. That's 1.5% for the Dow Jones Industrial Average, and the NASDAQ is down. Just to show you that rotation. Now, just because you're getting new leadership doesn't mean that those former leaders need to go down, right? It could be a sideways grind for some time, just like some of those cyclicals grinded sideways for the last several months as technology and that mega cap growth was really the leader in that period. Those semiconductors, things like that took over that leadership. Now you're getting back to some of those cyclicals, and it's more of a factor rotation. And now small caps, both the Russell 2000 and the small cap 600, both of them hitting new 30-month highs. 30 months, that's 2.5 years. And it's breaking out just now. And it's not just small cap growth, it's small cap value. Both of them hitting new multi-year highs. So even when you break it down to a more granular level, you're seeing that expansion. And you're seeing it in other areas too. Look at the German DAX, has done nothing for 5 months. Overlay the US Industrials Index with the German DAX. They look exactly the same because industrials are the largest component of the German DAX. There's only one tech stock in Germany, in the German DAX anyway, right? Like they're moved based on other things. So if you're seeing cyclical rotation in the United States, you're going to see it overseas as well, and you are.
Sauerkraut.com, go check it. It's unbelievable. The other thing I would say for people to understand trannies and industrials, because trannies we could lose followers by saying that out loud, is FedEx, all-time highs today. You couldn't find a more, I mean, obviously it's a tech company, a logistics company. It's the most
but
tech.
Uber's in the Dow Jones Transportation Average. Is that a tech company? Probably.
Right. I mean, they rely on maps, but I'm saying these are logistics have historically, and Mike would know this, been as he ran Goldman Research, probably the greatest of all tech companies are logistics companies.
I would maintain Uber is a tech company because the way they manage drivers, their supply on the transportation side is all algorithmically driven. And generative AI is going to have even more implications for that. So yes, it's about taxis and transportation, but Uber, Lyft, etc. They're extraordinarily, because they're one of the unique entities that run their businesses through algorithms. It's not managers who decide the supply-demand platform management. I know,
but Michael, what's not a tech company? Energy stocks are tech companies.
JC, I agree. This is a thing that I've had to deal with since 1993 when I started to talk about the internet. Every PM in the world would say, why is this a tech company? And you're right. Everything is run on tech. That is correct. Where I make the distinction is where the underlying business is fundamentally driven, that they're not operationally only, but it drives the financials of the model. The supply piece of it, the demand mitigation, surge pricing, etc. That is, so you're totally right, and this is a thing that we could debate all the time.
So like Match.com, is it a consumer discretionary stock,
we are
or
moving
is it
from classical Newtonian to quantum mechanics? We are in a place where they're both. It's the Schrodinger's cat is alive and dead. They're tech companies and not tech companies, depending on how you look at them, observe them, etc. So it is a great question. It is from an investment point of view, etc. It's something that it's a calculus problem. It is not an algebraic problem. So it's a rate of change thing. Would be my 2 cents.
And by the way, this is one of the reasons why I just play the indices over a long period of time, because you just said it's a calculus problem, and I can't do that kind of math. I'm just too simple for that. So I just hold a big basket for a long period of time. And by the way, in one of my old 401ks, I'm sitting on a whole big chunk of IWM that's just killing me for the longest period of time. And in my head, every once in a while, I'm like, I should probably just dump that. It's such a dog. There's no small cap premium anymore. It doesn't exist anymore. And now all of a sudden, out of nowhere, the thing's up 10% in 5 days. And it's like, holy cannoli. And so let me ask you this, JC. On the other side of the barbell, the Dow Jones Industrial Average, some of the biggest companies in the world, 30 of the biggest companies in the world, that thing is starting to move. So we're getting this correlation between this group of industrial mega caps and the small caps.
Because it's the sectors, right? It's the sectors themselves. The same sectors that are driving the small caps are the same sectors that are driving the Dow Jones Industrial Average, which are different than the ones driving S&P and NASDAQ.
Excellent.
So it's a function of the sector rotation. You're getting that bid in healthcare, industrials, financials, right? And what are in the Dow Jones Industrial Average and small caps that are not in the NASDAQ and S&P to that degree.
Beautiful. Okay, Howie, NYT, another one. I mean, we're shooting fish in a barrel here, embarrassment of riches. It's the whole thing. But NYT's going crazy too, and you're all over that one. What's your take there?
I'm not over it in the sense that I'm bullish, even though it's going higher. But we were talking about it. If you look at when it kind of had its pullback and bottomed, October 7th, I mean, I don't know if they are a tech company. They're suing OpenAI, who is a tech company, for, the content. Mike and I have talked about this on the shows ad nauseum, is that New York Times has this optionality, right? They've never had a bigger audience that hates America. And so they've decided to, in my opinion, quadruple down on giving the customer, the biggest customer base, the TAM, as a tech company would say, what they want. And what does a TAM of a New York Times want to be? Well, it's a gaming company with Wordle. It's a, I wouldn't say misinformation company, but it's an opinion-based business for the most part now, which is, and if you're going to do clicks, which is what everybody else did, you're going to be stirring the pot And they have a huge audience, like I said, in Russia, Arab, China markets, Muslim countries that like to see, will be happy to pay $10 a month to watch America burn. So I think they're all in on that. I can't prove it. If you really dig through the numbers, you'll see the international growth is where it's going to happen. Obviously, it's off. The Wordle acquisition was great, so they've done a good job, diversifying, growing their subscription business through other things. And if someone told you, and we were telling you that New York Times could really benefit from this world that we live in, they would have not looked at the stock. So if you look at the stock, it's all-time highs, and it's only an $8 billion company. And you think about the influence that this $8 billion company has. This is, in a time when we talk about Facebook and trillion-dollar companies, here we have New York Times with $8 billion that's under the radar. And I don't know what it's worth. I'm just saying it's undervalued in a world where they have this much power. So it's just one of those interesting companies that I'm following, and it's kind of mesmerizing to me. I don't know. Any take on that? Technically, JC, it looks pretty good.
Yeah. Look at the size of this base. It looks like Morgan Stanley before it broke out. Looks like a lot of things. We're back to the highs from 25 years ago. No progress at all. Complete crash and collapse. Made it all the way back. Got here a couple of years ago. Consolidated for a couple of years, like cup and handle-ish. Ultimately when this thing breaks out, and this could be it. I don't know. It is a bull market, so it probably is. But a breakout here, I think, would be incredibly constructive for the stock. Look at this. The bigger the base, the higher in space. You're looking at this stock in the 50s. This thing could be 150. I don't know. But that's the upside.
Well, here's the thing. If what I'm saying is correct, where the headlines are only going to get worse, right? Profits don't matter. So the markets don't care about the headline. You know who cares about the headlines? New York Times. If you want to own, if you're a degenerate and want to own headlines, you buy the New York Times, you buy Facebook. And I don't know. It's pretty. I just wanted to bring it up, Bill, as something that's interesting to me.
I have a take here that has nothing to do with politics, and that's this: that when that stock was getting killed, and it was after the dot-com bubble, shortly after, they pivoted away from dead tree to a subscription model online. And they wholeheartedly did it. And you have to give them credit for that. They took a huge risk. It was uncharted territory. They went full throttle, and they built the plane as they flew it. They figured out how to do it. I look at, I don't look at political articles, but I look at health articles all the time, and I'm not a subscriber. And I get articles all the time that I'd like to read. Maybe I should subscribe, but that I'd like to read that are about health or about sleep or whatever. And I click on it and I can't read it. And it's seductive to me every single time. It's like, oh, I really should subscribe. I really should try. And they figured that funnel out. They figured it fucking out. That's how I see it. Now, yes, to your point, Howie, they are globalizing that. I don't think they care about politics. I don't think they care about one way or the other. I think they just want to click. If you say, "Hey, I hate this," and it clicks. That's how this, and it clicks.
That's how they get paid. Michael, go ahead.
No, I on New York Times, I have a history going back decades with New York Times and all the newspaper companies, because when the internet came along in 94, 95, all of these companies were trying to figure out what is online, what does it do? And one of the clear things that I remember saying, not only to them, but a lot of the publishing companies, Knight Ridder, is that, look, you are going from markets that are defined by your geography in New York, et cetera, to global markets. And over time, that is what you've got to address. So back then, it was maybe 6, 7, 8 billion people. Today, 8 billion people. One of the things that they have executed brilliantly from a business point of view is widening their funnel, as Phil said, to a global audience, but not just in terms of news, but other things that click emotionally, engage people. In games was the logical one. Wordle is a runaway hit. You mentioned the company's worth $8 billion. Last year, there were 8 billion games played, Wordle games played on the platform. So people are coming into this from an emotional engagement point of view, whether it's the New York Times, whether it's Facebook, whether it's Twitter, whatever we used to call it, etc. people are people. They're engaging emotionally with everything anyway without any technology when the lights go out, like in Houston. But when we have these megaphones and so on, everything is amplified. That's the only difference with social media over the last 20 years. AI is going to multiply that by another 5 to 10 times in terms of the amount of content that's going to be discussed, because AI agents are going to be generating content against each other, whether it's the New York Times content or anybody else's content. There's going to be battles of content along these lines, and so it's the funnel expansion.
So when I originally brought it up, Michael and JC and Phil, my thinking was, it was at $46-47, and I said it's going to break out, right? Because, and here we are, it's broken out. So I'm more interested than I was at 46-48. But what they still have that option agreement. Michael, when I first brought it up, he said they have no chance of winning this. And I don't know if they have a chance of winning this. And we talked about Microsoft's AI CEO saying "fuck you" to the content companies, basically, and maybe it didn't say it well, but they're putting their foot down, saying, "No, we're not open to pay everybody." And New York Times sued, so they do have that option. It may not be a good option, especially in a Trump presidency, but they have that option out there that AI is, these guys may have to pay them for that behind the wall content that they're running LLMs on.
See, the suit, as I've said before, is a negotiating tactic. The OpenAIs and Googles are already, and everybody else are going to cut all kinds of deals, and they are already. You just saw the deal with Atlantic, which was very detailed.
Yeah, the Atlantic cut,
etc. And it's Reddit. Everyone's going to have a deal. New York Times will have a deal. This is a negotiating tactic. That's what the suit is about. It's very detailed, etc. And that'll work itself through the courts, just like in everything else. It'll take a long time, a lot of money. But the broader point here is, we talked about it last show, is that there is a common knowledge thing that's going on. All of the world's knowledge is going to be put in these things. Yes, the input from whether it's the big publishers like New York Times, etc. Yeah, there'll be compensation, and the compensation schemes will be redone as the technologies evolve in terms of how we use them. We have barely scratched the surface of how we use content. Barely. That's one of the topics around this whole AGI and reasoning and so on, agents. We're in the beginning of the beginning on this. So the lawsuit it's a part of the negotiation, in my humble opinion.
Yeah, and before we wrap it up, so my last thing on New York Times, $8 billion. I don't know the legal ramifications. Of course, Qatar is not going to be allowed to buy it. Maybe they will. I don't know. Or I'm just saying, at $8 billion, I personally today, if you gave me Twitter or New York Times at $8 billion, New York Times for $8 billion, some billionaire is going to go, wait a minute, this is cheap. I can't believe there hasn't been a hostile accumulation. Even I'm just surprised an Ackman or a Dan Loeb haven't made a move. So I wouldn't be shocked to see some. I don't know the legal of New York Times, but it's a public company, so I assume anybody can go say it's undervalued and buy up a shit pile of the stock. So I'm just at $8 billion, I'd be surprised if someone doesn't make a move there.
Look, Bezos owns Washington Post. Mark Benioff owns Time Magazine, which determines who we think about every year as the person of the year or thing of the year. Billionaires are in the ultimate place right now. We've never seen this in history, where billionaires across the spectrum have more voice. They're as important as whether it's right or left. This is a whole new estate. It's a fifth estate. And so you're totally right in terms of New York Times being...
Yeah, I wouldn't even be shocked if it was Andreessen. Like, if he's listening, and I'll send it to him, and Ben Horowitz, they just came out and they said they're giving money to Trump PACs because they've all of a sudden become a one-issue venture capital firm. Oh, because Trump's pro-tech. It's a comedy, obviously, and they're as much into politics as anybody else. But all of a sudden, this is their only issue. So I wouldn't even be surprised, because they've tried so hard to be in media themselves with Clubhouse and their own new publications, that they just throw in the towel and themselves invest money. They can invest. So, anyways, Phil, I'll move on. But it's that one fascinates me because it's $8 billion in a world where Snapchat's trading at $50 billion. It's just fascinating to me. Okay.
And don't forget Musk too. I mean, he bought Twitter, and now he's given $45 million a month to Trump. Okay, let's move on. So here's the one thing: it's embarrassment of riches. It's a world of pain for the bears. Shooting fish in a barrel. everybody's bullish, or maybe not, but a lot of people are bullish. And so if we're going to look for any reasons not to be bullish here, if we're going to say, hey, everybody's getting euphoric here, every market's going up, the big caps, the small caps, this sector, that sector, everything's working. If there's any reason for us to maybe, JC compiles a sentiment index that is a composite of multiple, the AAII, the VIX, put call, 10-day put call, 5-day put call, equity put call ratio, NAAIM. It's a beautiful thing. I don't know the exact composition, but it's beautiful how you do that. I just like the idea of having one ratio that captures all of it.
Yeah, I mean, listen, sentiment is part of the weight of the evidence, right? The price of assets is the only thing that's going to pay any of us. So that's really what I focus on. Sentiment helps put the current environment into context. So for example, sentiment got real bullish back in February, as you could see here, right? So this compiles all of the popular polls that you know, AAII, Investor Intelligence, the active investment managers with our financial advisors, volatility, incorporates it all and equally weights it. So we create a composite. So last time we were here was earlier in the year. And at that time, prices were out of control. I mean, in the fourth quarter, everything was working. We had monster thrusts. Like, breath could not improve anymore after December because everything was already working. So if everything's already working, mathematically, more things can't be working. So you needed some deterioration in that participation, and that came from extremes in sentiment. Now, sentiment is getting back towards those levels that we were maybe in February, but what's happened since February? We've gotten sideways action from the majority of stocks. The median stock is actually down since then, right? Or maybe over the last week that has changed, but for the most part, prices have gone sideways in a lot of things. Now we're getting rotation into consumer discretionary, which was a dramatic underperformer during that entire period. Industrials, things like that, but they're coming out of basis. They're coming from constructive sideways action. So that sentiment is less of a factor because the market is not stretched. You might look at an index and be like, whoa, the market is stretched. But when you actually look at the components of those indexes, nobody actually wants to take the time to do that, right? Like, everyone's just lazy and goes to the indexes like, oh, it's overbought, can't go higher. No, you have to go inside and see what are all the stocks and all of the sectors doing. And if you just take the time to do that, you'll learn very quickly that they haven't done shit for 4 or 5 months. So it's the furthest thing from parabolic nature. It's the furthest thing from a bubble. It's actually nothing. And when you zoom out, you'll also notice that the majority of these assets have done nothing for 2, 3, 4 years. So not only, in order to be a bubble, in order for things to be euphoric, prices have to be going up. Like, hello, right? We were looking at a chart of Japan earlier today, and you were looking at the 1980s. That's a bubble. This ain't that, right? So it's just really, really hilarious how lazy humans are. And that's the arbitrage, Perlman. Humans are lazy. You say it all the time. Humans, naturally, we want to create shortcuts. We want to naturally just get the answer versus actually taking the time to look and do the work. All you gotta put on some music and just go one by one and just fucking look. Like, it doesn't take that long, but nobody wants to do it.
So you're saying your composite shows that are reading this negative right now?
The lower it is, the more bullish it is, and the more risk there is. The higher it is, the more opportunity there is because everyone's bearish. So,
sorry. Like, so we're in a pretty. Oh, so I got it. Okay. I prefer to buy when we're in that crazy upper band.
Of course.
But yeah. Okay. So
but remember, you need bulls to be buying stocks to have a bull market.
Yeah. Interesting. I've been lightening up some Apple and Goldman. Now I know why, but doesn't mean they won't go higher.
That chart and what JC is saying kind of fits nicely with what Barry Ritholtz was saying last week, right? All-time highs and all-time highs lead to higher highs in many cases, etc.
Yeah. I would say there's probably, like JC, I'm on the rotation thing. Biotech's starting to work a little bit. FedEx breaking out to all-time highs. But at the same time, chasing these extended things probably not the best idea. Like a Goldman, like an Apple. It's like
agreed. There are stocks coming out of bases. There are sectors breaking out of bases: healthcare, financials, materials, energy. Look at different small caps, which like small cap tech and large cap tech might as well be two different planets altogether, right? So small cap tech doing really well. Small cap consumer discretionary versus small cap versus large cap consumer discretionary, also very different. Large cap healthcare and small cap healthcare. Now you're talking about mega cap healthcare versus biotechs. Those are two different things too. Large cap financials versus small cap financials. Now you're talking about big money centers and broker dealers versus regional banks. So large versus small is a huge difference when you go take the time to actually look, which nobody wants to do. You'll quickly notice that. Perlman, can you touch on that? How
we are lazy thinkers. We're lazy thinkers.
It's the hack. The hack is to do the work.
Yeah. From a technological point of view, we squeeze a lot of inefficiencies out of the markets. ETF industry squeeze a lot of inefficiency out of the market. So you have to go and look for where there's still inefficiencies in the market. And one of them is that we're all lazy. Social psychologists call it cognitive miser. We're cognitive misers. And that's why there's these heuristics. We take shortcuts. 95% of the time in the world, taking mental shortcuts works fine for us. 5% of the time or less or whenever, those shortcuts cost us. And so in the market, you're sitting back and you're doing the work and you're looking under the hood. And there is where, there's gold lies there. So I agree with you 100% on that.
Quick question for everybody. I'll pass around the horn. In a world of doing the work, there's never been easy not to do the work. And I say this with ChatGPT, right? Like even for finance, like it's never been easier to hack, meaning we can have a guest on. I can go into Perplexity. By the way, you can do this in Google if you have their beta. I can go into Perplexity and ask a person's name and truly get a beautiful layout of what that person is done. So it's really weird, JC and Phil, I'll say this to you, is like we're innately lazy, but it's never been an easier time to be lazy and actually get work done. So I wonder what that does to the market.
It depends on what.
Pass that around.
Well, Perlman just said 95% of the time that cognitive heuristic is actually perfectly fine, which are the cases that you're using now, where you're purposely going out of your way to use the technology to help you. What I'm referring to specifically is in looking for inefficiencies in the market, where looking at the breadth statistics, looking at what the S&P 500 is doing, looking at an advanced decline line is not going to give you that information. You actually have to go in and look. The beautiful part of that is that it doesn't take that long. It's not that hard. You don't need fancy research and fancy data. It's all public. Just get every sector on a market cap weighted basis. Get every sector on an equally weighted basis. There's only 11 sectors, by the way. Get every sector small cap index. Get every sector relative to the S&P. How many charts are we talking there? 50 charts? That's it.
I'd still rather do it. I'd still rather follow you. I'd still rather just hack it and follow you. So I'm saying, like,
fine.
It goes back to no such thing as information overload, only filter failure. There's never been a better time to like stop making excuses and fix your filters. Mike, any thoughts on that? On like, ChatGPT is like, is it a safe hack? Is it a good hack? It seems like it's the ultimate hack for people that never could fit in. It's a great hack for people that know how to hack, but it's also a new super hack for people that were misfits.
As we go into AI, moving from chatbots to reasoning and agentic, we are going to go from being cognitive misers to what Phil's talking about for millennia, because our brain can only process 2 or 3 things because that's how we've evolved, to being cognitive kings. We are going to have a bounty of information that AIs will process for us and then serve it up to us saying these 3 things this second when you're talking to Phil, these 3 things this second when you're talking to Howard, that sort of thing. So these systems, they will cater to our limitations, which is, as Phil said, cognitive misers. I love that phrase. So ChatGPT, this is again beginning of the beginning. We are going to see automated systems that are just going to every day, even into our AirPods, will say, this is how you want to think about this. This is what you need to pay attention to. and we can choose to, dial it up and down. And I'm not doing sci-fi
no,
thing.
Google Maps is the ultimate.
This is coming in the next 3 years.
Yeah, I think every time I come to Europe, whether Phil's using the maps for me in Italy and fucking it up, or just me using the maps and fucking it up myself, the way maps improves each time I come overseas, just when I need maps, is astounding. Like if AI is anything like maps, and that's really what it's going to be about, AI becomes air.
Howard, to what you're saying, Google just released AI layers into their maps. So is Apple through Apple Intelligence.
It's insane.
So in the next 18 months, when your next trip to Europe, these systems, you were going to say, this is where you want to get this wine. JC, you love this Cabernet. These 2 restaurants have it. It'll just know, your map will show it to us. We talked about Uber. Uber is not going to be a 6-7 click system. It will just do things for us automatically. Morgan Stanley did a 70-page report on AI smartphones. This is a 5-year plus upgrade cycle. It starts this fall with the Apple iPhone 16 and the latest versions of the Android. The reason I bring it up is smartphones are a $400 billion a year business every year, compared to $100-200 billion so far invested in AI. And smartphones around the world are a $5 trillion market. If you think about a 5 to 10% upgrade on smartphones to AI, and with all the software we're talking about, like Google Maps and Apple Maps and Notes and Photos and all these things, there is a humongous amount of AI assist coming at us that will allow us to function better, potentially. And it's not,
it happened to me think about this. It's like, an app I use but don't pay for, Strava. Probably one of the apps I still use the most other than Spotify. And again, you guys could care less about Strava, but I do because I ride. And I don't use Strava because I'm not a data geek. I use Strava just to let me know what the distance I rode was. And today it blew my mind. So I shared this. JC didn't even look. When I shared it in the group chat, my ride, it told me, even though I had a sense, it told me it was the 3rd longest ride. That's fucking blew my mind. That little kernel change. I will pay Strava just for serving that to me. It gave me some context into how hard I've worked over the last 8 years. And, I had a bad day. Like I was struggling. I'm not feeling great. The guys that I usually beat me up the mountain. But I didn't feel bad because I know I knew I was weak today. But at the same time, for Strava to serve that to me just took Strava to a whole new level. It was the smallest piece of information, but it was the most relevant data they could have ever served me because I had a new context into what my day was like.
And Howard, that happened exactly because we were talking about personal data and in the last couple of calls. Strava took your personal data with your permission and leveraged that. And without you doing a single thing, lifting a finger, auto-magically said, hey, this is your 3rd best ride. Okay. These are the kinds of things that are going to happen in the hundreds of occasions across apps in the next 2 to 3 years across anything you use. And this is what's going to take to move the needle for society to go from fearing AI to leaning into optimistic about AI. These are the small little things. They're the littlest applications. They'll startle us because we don't expect technology to do things for us like this. We typically have to do everything for technology so far for it to do things for us. And this is changing.
Yeah, and this is why I think Netflix, Spotify, New York Times, now Strava, which is going to get my money for the first time in 10 years, even though the app's always been great. If the CEOs do use AI properly, and we're thinking about this at StockTwits, JC and Phil, we're always talking about it, guys. You guys are helping me think through this. It's the beginning of the beginning because we have 16 years of data. We've just never had the way to run it and think about it. Just like JC pulled indicator across, 60 sentiment things. Now he can easily add a 61st and 62nd, as long as he trusts that data.
No, I mean, the PC, whatever,
and create
PC
multiple indexes, one with new data, one without, right? It's a weight of the evidence thing, for sure.
Whatever computer JC is using, in 2 years, it's going to say, JC, this is how you do your searches, look at charts, etc. Here are 3 charts you may want to look at because we processed it on your data to give you these other three things that you may not have looked at because your mind was being a cognitive miser, looking at the things that you or typically look at. You didn't see this thing in the peripheral, and that's the change.
By the way, none of this changes the fact that Phil's right, and most of us should index because I'm indexing more than ever myself. But yeah, really fascinating discussion in that none of it changes the fact that Phil's probably mostly right about how to manage money. Phil, I want to talk about the EU, but was there anything else? Like I want to talk about who's losing.
So much. We're missing so much today. It's hilarious. I got like 5 other things to talk about. But let's just go really quick. Fisk and Taylor, 84, coined the term cognitive miser. They are social cognitive psychologists. Look them up. Great reference and a great model of how we operate. So you as a human, how you tend to make decisions and how you tend to make choices and think. But I do want to get to, JC has a couple crazy charts. He's got like the Amazon of Africa and the Amazon of Kazakhstan. Is that even a country? Don't cancel me for that comment. But I want to talk, we were talking about AI and we're going deeper into that. So I want to talk, Michael, by the way, Michael, you have the best newsletter on AI extant. And I'll tell you why, because I read it and I can understand it. And I'm a fucking idiot. I don't understand anything. I start reading these AI posts 2 seconds in, I don't understand what they're talking about. They're talking about, zegabits and kilowatts, and I don't even get it. But you present it in a way. So tell us really briefly, what is AGI? I know people kind of understand it, but they really don't. And then briefly tell us about the 5 levels and what's going on with OpenAI and the time frame for that. Just give us a 5-minute tutorial on that. And then JC will go right to you.
Thank you for the kind words. This stuff is so important for everybody, and it's nothing to do with the technology. It's just behind the scenes. AGI stands for Artificial General Intelligence. It's a buzzword that has captivated the AI industry for the last 2 or 3 years because we've been fearful of it in the context of things that what happens when these AIs are smarter than us humans, and the media and regulators always framing it that way, and that to me is missing the forest for the trees. And OpenAI, Google, Anthropic, everyone's been talking about AGI and how soon we get there. Whether it's the next 5 years, 10 years, 2 years, 3 years, there's a big debate. I have a big post on it, which we can point to. But what happened in the last 6 months, and by the way, one of the reasons OpenAI had the big soap opera drama in November, where they fired their founder CEO Sam Altman and then brought him back, was around this fear of AGI. That, oh my God, this AGI was going to happen too quickly, and we're going too fast, and it's going to be bad for humanity. So OpenAI has been smartly reframing the word AGI and bringing it down to earth. And so they leaked their internal plans. This is my assessment. The Bloomberg had an exclusive story that they were basically now defining artificial intelligence and AGI in 5 stages, level 1 to 5. I think they emulated the 5 levels that have defined from a government point of view how we assess the road to self-driving cars over the last 15 years. And I've talked about this before. I have posts up on this. Despite all the ambitions of Tesla and full self-driving, we're at level 2 on the 5 levels of automated driving. Level 5 means you have no steering wheel; the cars just drive themselves, any weather, anywhere, any roads, etc. So they're taking a page. OpenAI took a page from there and said, we're going to say 5 levels. The first level is chatbots, which is where we are today. And the next 4 levels, the next 2 things that are important are reasoning for AI. This is something that I've talked about extensively. And then moving to agents where the systems can do things for you. So basically helping. But they can only do reasoning and agents if they have access to your personal data. It's like Strava knowing how many bike rides Howard has taken over the X number of years and then saying, hey, this is your 3rd most long ride. And then level 4 and 5 are the AGI approaching things, where these systems can innovate. They can find cure for cancer through all the data. They can also run organizations, so they can help General Motors run or StockTwits run the business much more efficiently, etc. Those things are years out. None of these leaks basically talk about a time frame. They basically suggest over a few years. What was interesting is that also this week, Google put out an AI paper, which I wrote about just a couple of days ago, where they laid out their 5 levels, which are similar in some ways, where they talk about level 1 as being emerging, level 2 being AI being competent, number 3 being AI being experts, and number 4 being AI being virtuosos. They can do things for you. And number 5 being AI being superhuman, so super intelligence, which is, again, the AGI kind of stuff. So these are just definitional things. The reason it's important right now in July of 2024, it takes the ephemeral debates on AI, AGI, etc., and brings it down to earth. It brings it down to the point where Howard gets excited about Strava for the first time, that, hey, this thing just told me stuff I didn't expect it to tell. That's a little bit of reasoning and a little bit of agentic, level 2 and level 3 right there. And even though they're bringing it out sequentially on this chart, this is all going to kind of start to happen very quickly. Reasoning and agentic is basically going to be what AI companies, large and small, globally are going to be focused on, at least for the next 2 to 3 years. And all the other stuff is going to happen slowly at the margins and then will become mainstream, but they'll take longer.
So they're beginning to delineate, they're getting more concrete, and it's becoming real.
Correct. Slowly. One step at a time. We are still in the early days.
Okay, let's continue. We're just trying to packing as much as we possibly can in. JC, Geo Group, private prisons and private mental health facilities. Plenty of crazy for all of us. What does this chart look like to you?
Yeah, so son, obviously after the events of this weekend, I had additional interest in terms of how the markets opened up in terms of the futures market. As soon as the news hit from Saturday night, I looked to see a bid in Bitcoin, things like that. I thought that was interesting. Come the open, there was no bid at all in gold. There was no bid at all in bonds at all. In fact, bonds were down. So some of those traditionally safer, safe havens. Granted, we didn't see the knee jerk Saturday night as soon as the news hit because futures were closed. So by the time they opened, the knee jerk was over and kind of like people had kind of figured out how to put money to work, and they were selling bonds and they were buying stocks. And then when you look at the 24-hour trading markets on Robinhood, I sorted by best performers on Sunday night, and the best performer was obviously the Trump SPAC, which was up like limit up. And then Geo Group was the second best performer. Geo Group was the second best performer on the evening, and it was up like 13% at the time. And I didn't know what Geo Group was, and then I looked it up, and it was mental health facilities. I was like, well, that makes sense. And then of the top 10, it was all Bitcoin stuff, right? Like leveraged Bitcoin ETFs, micro strategies, marathon, like just Bitcoin stuff. And then there was Tesla also. So Tesla got grouped into that. Tesla was also up like 6.5% on Sunday night. So kind of got grouped into that, whatever event conclusion, if you will. But this was the second. The knee jerk on Sunday night was to buy mental health facilities. So that's what stood out. And it's also been coming up in our relative strength scan, in our small cap scan, which we call the minor leaguers, which are stocks between $1 and $4 billion. So when you see stocks coming up on that scan, and then you get a momentum thrust like that on a Sunday night, all kind of coming together, it's probably going a lot higher.
Yeah. So Phil, I know JC usually runs, but the other thing is I didn't even think about that, but Robinhood's probably the only legitimate scaled person that could do 24-hour trading, and people like JC are starting to read into that. Like, I didn't even think of that, because generally we would think of the aftermarket traders are the suckers, but eventually the suckers learn. And what a great way to teach people is to have markets open 24/7. Like,
and by the way,
there's nothing wrong with markets being open 24/7. That's like saying you can't speak English from 9 p.m. until 6 a.m. the next day, right? Or Chinese.
Crypto's been open 24 hours forever, so we've already gotten used to it. It's not that big of a deal.
But that's another Robinhood edge that they have. They have scaled that data is actually useful. Actually, that's very interesting.
And it's not always as useful. This was a kind of like a specific use case where you have an event on Saturday nights, like how's the market reacting? Not every Sunday night.
But in 10 years, it's going to be useful is what I'm saying. These are the little shots heard around the world that like in 10 years are going to mean something, especially it's like my Strava moment. Okay, Phil, obviously we don't have time to cover the EU. I will say that I have been blown away by the diversity of Europe is just going to be the world's playground. They don't know what the fuck they're doing in business, but it's going to be the world's playground, right? Like I saw thousands of people riding one of the hardest mountains I've ever done today. So cycling's booming. You had huge news from LA Golf. Bryson DeChambeau designed a driver for everybody, right? He's out. Here's a guy who is a geek, and now with some money and some exposure, he's going to change the whole game because he in his head understands how the golf club works and how people work, and said, why should one club be the same for everybody? So not only are they changing the shaft, so tech is coming for everything, right? It was like there's so many things that have been scams or not scams, but like common knowledge or whatever we call it. The narrative has been, here's what you get. Pay $500 for a driver and it's the best. And now you have the individual saying, no, I'm the best golfer in the world. I've tinkered. Everybody's different. You know what I mean? It's like there's so many moments that are happening. And then I'll tell you one other internet moment because the internet is amazing. Max, you guys will fucking piss your pants. It's a Hinge moment. Max uses Hinge. We're at Wimbledon. He books a 10 o'clock date in the UK with the Jewish girl. So he's picking up a Jewish girl in the UK for a 10 o'clock date. Okay, this is like, that's the internet. There was no, how do you turn that off? I'm saying you go to a club, I guess, before that, but I'm saying the world is like open to everybody. Right.
And even European stocks are at all-time highs. Eurostoxx 600, which is the broadest measure, all-time highs. Eurostoxx 50, which is there now.
Who's the biggest loser? The EU. I mean, the way they talk to themselves and to the world is just bananas.
They're really going bananas against all the big tech companies, and they've made themselves the AI cop of the world. AI cop of the world.
Phil?
Go ahead.
But to JC's points, they're also making all-time highs. So who good points.
No, but I'm saying they're not business friendly to outsiders. Meaning, the market's the market, money's flowing, but
nothing for 20 years because of their lack of tech exposure. To your earlier point, while the S&P 500 and the Nasdaq had been ripping here in the United States for a while, the fact that there just aren't any tech stocks in Europe, or very little, obviously. In Amsterdam and, in Israel, and, you've got some tech, but just generally speaking, that's not the driver of European markets. You have a lot more cyclicals, a lot more exposure to industrials and financials, and even natural resources that the United States doesn't have. So that's why it took longer for them to get going. But like we always say, bigger the base, the higher in space,
But recognize EU, EU is the second largest or third largest, depending on how you counted GDP, block of 27 countries. They're growing less than 1% this year. The growth element is not there because they're still broken up into countries and all of these other issues. The other thing, to Howard's point on visiting Europe, it's wonderful. Europe is having the record year, I think, for tourism, especially from the US. But there are stories in Barcelona, in all the major cities in Italy, where there's anti-tourist stuff going on. People are throwing stuff like water guns in Barcelona against American tourists eating their tacos or whatever. They don't eat tacos, but you know what I mean. So Europe is the French insistent on living Europe at their pace, and that's the distinction going on here.
I just have one last comment today, and this goes out to the audience. Everything's working, right? And this goes for health and wealth. That's what made me think of it. It's a parallel. Everything's working right now. Maybe you're feeling great too. Don't do anything stupid. That's like your one job for the next week. Just don't do anything really, really stupid. Don't, if you're holding something, you've been holding it for a long term, don't go just selling it now because it's going up so much. Just don't do anything drastic. Don't do anything stupid. Let the world happen. no unforced errors. That's like all you have to do now. You don't have to do anything brilliant. Just don't do anything stupid. Same thing on the health side. Like don't, go out and start smoking.
No sudden move.
All right.
Great advice.
All right, kids. We'll let JC go. We'll hop. I'll see you guys. I'll be in Nice for the final day of the Tour de France next Tuesday. So I'll report on the finish line.
Enjoy
and
Europe.
what Toby Pogacar what Toby's doing? Is it saying? Well, he's going to win his third tour unless he has a heart attack. It seems like, or God forbid, a crash. I mean, you're talking about a guy who's he's a little guy, right? He's not cheating. He's just a pure machine on a bike. So we're seeing greatness. The Olympics coming up, so I'm excited to do that next week. All right, guys. Thanks.
Thank you, everybody. Thank you.